Rick Nason is Associate Professor with the Faculty of Management at Dalhousie University. Sir, how would you begin to describe what is happening on the markets these last few days?
Uh, I'm not exactly sure I'm creative enough to give you a description of it. Obviously, we've seen a lot of volatility. It's been interesting, to say the least, how the markets have reacted, and even how the markets have reacted within the microcosm of today.
Well, it's true, and it's unsettling for so many, anxiety setting in for some, no doubt. What do you tell those who may be feeling the pressure to run for the exits now?
Well, with all due respect to you and your peers, I think a lot of the anxiety is actually being brought up by the media. You have to realize the natural reaction of investment professionals whenever they don't know exactly what's going on in the markets is to go to a safe harbor, which is kind of what the markets did over the weekend. But then, obviously today, things started to tumble yet again. But even in the context of today, we almost have to timestamp this interview because things have changed so dramatically today. And I think that what we're starting to see is that calmer heads are starting to prevail and people are starting to figure things out. Has anyone figured it out exactly what Trump's objectives are and what his methods are? I'm not quite sure we're there, but people are recognizing that this isn't a traditional crisis in the sense of where everything should be dumped.
So, yeah, when you say calmer heads prevail, who are you talking about there? Companies or investors or both?
Uh, I think mainly the institutional investors. I think companies a lot of the companies are sitting on the sidelines, waiting to see exactly how this plays out. The large institutional investors have one part the luxury of being able to quickly get in and out of the market, but they don't have the luxury of staying out of the market. And I think there's a couple of things that we have to remember when we think about the current context. First off, most people thought the market prior to all this was a little bit rich to begin with. So we're kind of starting with a very high base to begin with. Secondly, and not a lot of people picked this up, but when Trump was actually introducing the tariffs during the news conference, the initial American reaction was positive, i.e., the futures markets were all signaling green, either all signaling that this was going to be good economic news. And it wasn't until things shifted to Asia that the financial markets started to go south.
So if you're a pensioner, let's say, sitting at home watching this tonight, at what point do we get to the kind of market shock where it might impact pension plans to a point that it affects people's long-term retirements?
Yeah, well, my first advice there is, while one never wants to use history as a guide for the future, history kind of shows us the worst time to react is when the markets are in panic. The second thing is to use this as a lesson to think about what your portfolio is before these things happen. Having a portfolio of high quality stocks, companies that that are going to be there for the long term through thick and thin, that are going to continue to pay dividends regardless of market conditions. Those are the ones that you want to mainly be in your portfolio as you're in your retirement years. However, we focus on the go-go stocks. You might recall, talking about GameStop, and the meme stocks. Those are the ones that we focus on. The core consumer durables, if you will, the core companies that make the brand name products that we rely on day to day. They're going to come out of this okay in the long run.
It was interesting. The U.S. Secretary of Commerce Lutnick was asked on the weekend if he had forecasted this kind of carnage on the markets, and he didn't really answer the question. Are you at all surprised by the severity of the impact on the markets?
The severity, yeah. The volatility, no. Um, if listening to Trump and living through the first Trump administration has taught us anything, it's to expect volatility, to expect the unexpected. Um, I think, like everyone, I was scratching my head at what actually is the end objective of this, because by any stretch of not only academic finance or academic economics, but even real world finance, i.e., practical finance, it really didn't make a lot of sense. But he's obviously playing a much longer game. He's also probably playing a short-term political game. And that, I think, is what really confused everyone.
Yeah.
Ultimately, what are the long-term objectives here?
And so, how much pressure can a market dive have on forming that political policy?
Uh, in a lot of cases, a market dive can definitely help, at a minimum, nudge political policy. I'm not exactly sure that will work with Trump. Obviously, I make no claims of being in Trump's head or understanding Trump whatsoever. Normally, something like this would have political leaders, in a war room type setting. It certainly will have a lot of central bankers in a war room setting. And I think that it's getting a lot of foreign politicians into a war room type setting, economic war room, I should stress. And that might actually be the objective of it,
Yeah.
or one of the objectives of it.
Okay, well, we'll see how it all plays out, I suppose, in the weeks and months ahead. Rick Nason, thanks so much.
Thank you.